particularly on the back of volumes as well, is Ola Electric. Let's pull up that chart and see where it's at right now, up close to 7.5%. And the volume is also quite considerable, as I pointed out. But this is therefore the prime candidate for bulls versus bears. Should you bet on it right now, or should you sit on the sidelines? Puneet joining in to give you the perspective so that you can make the right decision. Puneet, how does it look?
Well, thank you for that. The stock's definitely trading at 43 rupees per share, and it's also up 43% since December 18. So it has had a multitude long-lasting impact on shareholders who got in and around that time. In terms of the weakness, though, the sales has continued to be in a downtick. It's down. The share is just down to 9% versus almost 25% it was in the same time last year. So definitely the sale performance does not reflect anything on the share price. It's been a downward momentum in 2025 as a whole as well, because while there has been the negative news flow just prior to December 18 that Ola Electric's founder Bhavish Agarwal has actually come out and sold shares at 35 rupees per share. That's almost down 53% below the IPO price. That turned out to be one of the key low levels that investors should have bought into, and those who did were quite lucky indeed. The other aspect is that the market share has improved from November, which was at its lowest level at 7.5% to 9%. There's still a very low recovery in terms of market share on a YOY basis. The third key point on bull versus bear is the fact that the company has lowered its guidance post quarter two earnings of FY26. They are now looking to sell 2.2 lakh scooters versus the earlier guidance of 3.2 lakh scooters for FY26. But just in the first 9 months, they've been able to manage to just sell 1.42 lakh scooters. So 80,000 in the next 3 months seems like a very huge and tall task for the company that's averaging around 27,000 scooters in a quarter. So they are set to miss their targets yet again, and expected that it will be a weak performance in quarter 3 also. Finally, in terms of valuations, the stock has corrected 50% and sales are also down 50% in calendar year 2025. But valuations are attractive compared to historical levels. Stock's almost down 60% from its high of almost 100 rupees per share on a one-year basis. But that is the bull and bear case for Ola Electric. There is a lot of negative news flow around the counter, but those who did trade that but and got into it at 33 to 35 rupees per share have had the last laugh.
So Ola Electric, thanks Puneet for that. If you see the stock, interesting run, and to compare this one to even Ather, let's pull up Ather also on the screens, because both of them are seeing some different reactions today. You have Ola, which is at the day's highest levels. Ather is at the day's lowest levels, with cuts of 8% coming in there. Amit, in terms of charts, two inverse charts is what you're seeing. What would your strategy be?
Ather, if you look at both the charts for the last 1 year or maybe 2 years, Ather has been a wealth creator of some sorts in relative comparison to Ola, whereas Ola has been a wealth destroyer. Ola has faltered to deceive time and again, and even this up move, while it looks very smart from 32, 33 levels, it has gained by about 10 rupees. I would still, it is near the weekly moving average resistance point. So it would be interesting to see whether it sustains here, and then, if their journey continues, one could look at creating longs here. Ather, while we do see a very sharp dip today, however, if it comes around 650 levels, 625, 650 levels is where it has formed a basis and has, time and again moved up from there. So anytime it comes around 650, 625 levels is a place where one could look at accumulating Ather, which has been a consistent wealth creator.
That's with regards to where the two-wheeler space goes. In fact, Pankaj, your view when you're talking about EVs, the two-wheeler segment, and the kind of numbers that have been reported on the wholesale and the retail side of it as well for the month of December.
So, in general, when I look at autos, so this is one of the best performing sector, delivering about 80-90% kind of a return last year. While yes, our sense is that you have 8-pay commission as a positive, which could lead to 300 to 400 bips higher growth rate compared to what we have seen up till now. But our sense is that a lot of these are already there in the prices, so we are not recommending any fresh entry into auto as a segment. Though the numbers can remain good for a few months, but our sense is that we have already seen a good part of the rally in the most of the auto counters. But selectively, if you ask me, probably Maruti still has room to sort of catch up. And in two-wheeler, I think overall sense is that Bajaj Auto can sort of do well, given the fact that their export exposure is quite decent, and we have seen their currency depreciation.